Welcome to our CFP Exam Prep podcast. Today, we're diving deep into cost basis calculations, a critical concept that frequently appears on the CFP exam and often trips up candidates. Let's clarify what original cost basis means and explore its components. Original cost basis is much more than just the purchase price, and understanding this concept thoroughly can make the difference between getting questions right or wrong on the exam. The original cost basis includes several key elements. First, there's the obvious purchase price of the asset. Then we add sales tax paid on the purchase. We also include freight charges for shipping the asset. Installation costs are part of the equation too. Finally, we add testing costs to ensure the asset functions properly. Let me break this down with a practical example. Imagine your client purchases a specialized piece of manufacturing equipment for their business. They pay $100,000 for the machine itself. The sales tax is $6,000. Shipping costs from Germany amount to $8,000. Professional installation costs are $4,000. Testing and calibration services cost $2,000. Many candidates mistakenly only consider the $100,000 purchase price. However, the correct original cost basis is actually $120,000, incorporating all these components. A common trap on the CFP exam involves questions about exchanged property. When property is received in an exchange, the fair market value of the exchanged property becomes part of the cost basis. For instance, if your client trades in their old machine valued at $30,000 plus $70,000 cash for a new machine, the cost basis isn't just the $70,000 cash paid, it's $100,000, including the FMV of the traded equipment. Here's where candidates often make mistakes. They forget to include one or more components of the cost basis, particularly overlooking freight and testing costs. Another frequent error is confusing fair market value with book value in exchange situations. The exam loves to test these nuances. When studying for the tax portion of the CFP exam, create a mental checklist for cost basis calculations. Purchase price, check. Sales tax, check. Freight costs, check. Installation expenses, check. Testing costs, check. For exchanges, remember to include the fair market value of traded property. Real-world application makes this concept stick. Think about buying a car. The cost basis isn't just the sticker price. It includes sales tax, delivery charges, and any additional dealer preparation fees. This same principle applies to business assets and investment properties. A crucial point for the exam is understanding what's not included in the original cost basis. Operating costs, repair expenses, and routine maintenance are not part of the original cost basis. These are separate deductible expenses. The exam often includes these items as distractors in multiple choice questions. Investment assets have additional considerations. For stocks and bonds, include brokerage commissions in the cost basis. When inheriting assets, the cost basis is generally stepped up to the fair market value at the date of death. These variations make cost basis questions particularly challenging on the exam. Remember, precision matters in cost basis calculations. Small oversights can lead to significant tax implications for clients, and more importantly, missed points on the CFP exam. Master this concept, and you'll handle these questions with confidence on exam day.